Hey traders, this is Brent Verkus with Market Timing Academy, and I'm here with your weekly stock analysis. Today is July 7th, 2010. We're having an awful nice day here in the market. The Dow is up 244 points and the NASDAQ is up 54. So the question of the day is Hospira Inc. HSP is the symbol. This is the stock of our weekly analysis. The question is will this stock make a run if we get this market to turn around? Let's take a look. Okay, as you know, we use this nice little tool right here from Investors Business Daily, which gives us a good snapshot of what's going on with this stock. Now, HPS develops specialty injectable pharmaceuticals and drug IV fluid delivery systems. This is a great example of one of the things that you'll learn when you read our 20 most common mistakes investors make, is that a lot of the times the best performing stocks that you find are going to be stocks that you perhaps don't recognize the name of. And I can tell you, Hospira has been around for a while, but it certainly is not a household name. So let's look at a couple things. In an article last month, the company noted it may be able to expand its market share. Earlier this year, the FDA ordered its competitor Baxter to recall about 200,000 pumps, and analysts say Hospira may be able to step up and fill the void. So a good thing for them. They've got some good timing here. Now, earnings growth has varied wildly over the past 4 quarters, coming in as low at 12%, but just in this last quarter, you can see here, earnings per share came in, or the estimate is 57% above last quarter. And so that's very strong. We look for about 25%, as you know. The company also is slated to report earnings July 28th. Analysts predict a year-to-year growth increase of really just 8%, which isn't a lot, but when you're dealing with a company in this type of space, sometimes these wild swings in earnings happen. And so I wouldn't put too much attention to that. Look at what they're going to do moving forward. Now, sales growth has been accelerating with each quarter coming in higher than the previous quarter, but at 17% right here last quarter, you can see, again, this is a bit below what we typically look for, which is 25% at a minimum. For the full year, I can tell you the earnings are rising about 12% in 2010 and about 15% in 2011. Again, so not super performance on the earnings, but there is some positive stuff on the stock fundamentally. Now, return on equity was, where is that? Return on equity was 23%, which, as you know, we look for a minimum of 17%. So a good variable there. Now let's look at the company's overall rating. It shows a 99, which is the IBD composite rating, which means that it is the best in the group against its competitors, IPAX Laboratories, Perrigo, High-Tech Pharmaceuticals that we've made quite a bit of money in over the years, and Watson Pharmaceuticals. And so that gives you an idea of how they stack up against their competition. Now, what is really interesting about this stock is the chart. So let's take a look at the technicals. All right, let's take a look at the chart for Hospira. We've got a chart running from March of 2009 through today, which is July 7th of 2010. As you can see, over the past year, this stock has been in a very, very strong uptrend. So we're looking for buy points on this stock, not sell points. And as you can see here, over the past few months, this stock has moved into a very nice cup-shaped base. And what we like about this base is that this area right here, the cup, has been fairly tight trading, and so we like to see that, especially as ridiculously volatile as the stock market has been. You know, something like this shows that there's not a lot of sellers in this stock, and so what we're looking for now is a buy point right at about, let's see here, 58 bucks a share. And so as this stock comes out of its base and crosses back through this buy point, which you're seeing right here, it actually happened the other day, for the record. But nonetheless, this is the buy point that we're looking for. Now, we have not entered this trade at this point because, as you know, the market is still in a confirmed correction or a downtrend. And so when the market is in a downtrend, clearly you don't want to be buying anything. You want to be looking to take profits or protect yourself on the losses. But on the flip side, we do know that the market eventually will rebound. And when it does, you're going to want to have a good locked in sort of potential buy candidates or your wish list, your watch list, whatever you want to call it. Right now, Hespera is definitely in our watch list. Even though some of the fundamentals are not great, we have seen some good earnings per share growth here just recently, and a stock that held up this well in a good industry during a bad market is something that you're going to want to watch out for. So keep this on your watch list, and I will let you know what we do with it.